Welcome, welcome, welcome to Crashes and Taxes, everybody. I am your host for this podcast, Rebecca Walser. I'm really excited to be with you. I have decided to absolutely make sure that I do a podcast with you guys every week because things are going to be getting started now in earnest with the things that we've been talking about for a while now. I'm expecting big things even Saturday, the 24th, the 26th, and then we're going to go from there. So there's a lot of stuff that's coming. This is not, it's a public broadcast, and so I can only say so many things. I just had a town hall this past last week, the week of I had the town hall on the 13th. So I had the town hall on the 13th, and that's important because I'm going to share some slides with you, and I'm going to show you some things that I want you to see so that you can understand, how we look at things, and that I think that we're really on track. No one can know everything. You've got to have multiple resources, you guys. If you could see my world of resources, you would be shocked. But I probably spend I don't even want to tell you how much time I spend. I spend hours and hours a day among multiple disciplines getting all of the information of where everything's happening. This is not normal for me. This is not my normal sort of job. My normal job, obviously, is just tracking where's the next money place to make investments. But we're going through an unusual time. We're going through a currency global change. This is coming. I can tell a lot more people are aware of it now than have been before. We were getting a lot more news articles that are starting to express, they can't, I guess, keep this information away from us for forever. And therefore, this is the information that we're starting to see. So let me go ahead and share my screen with you guys so that you can start to see kind of what we're talking about on this podcast. And I want to start with this article from Financial Times. Now, this came out at the end of 2021. So this was a December 2021 article. You can look this up yourself. Everything that I source for you guys, you should definitely go through and source for yourself. Double check all my work always. It's Reagan's trust but verify. I hope that if you spend any kind of time with me on the podcast, you're trusting me, but I still don't trust anybody right now. Make sure that anyone you're listening to, you're double checking their references and their sources and making sure that the information they're delivering to you is correct and it's being delivered in the way that's accurate towards the actual information. Sometimes the headline is different than what the actual article says, even though you wouldn't think that would be the case. We do get deceptive headlines all the time. So I want to let you know that the first point I really want to go over today is the liquidity threat that's looming. And this is such a huge topic. To put it into condensed format that is understandable in 5 minutes is impossible. But let me just really sum it up. We have according to the IMF study that came out last year in 2021, we have over 300 trillion of debt in the world, private debt in the world. And so the IMF was highlighting this as an issue, but let's go forward to talk about what is the issue with liquidity. So and I used to work in a commercial banking department in college. I mean, I did that in college and then I got out and got a different career in finance, but I was in commercial banking in college. And in commercial banking, companies have to submit their financials. People don't realize this if you've never been a banker, if you've never done commercial finance, but companies have to submit their financials on a quarterly basis. And they have to be, some type of GAAP financials, generally accepted accounting principles. So whether that would be reviewed statements by an accountant, audited statements by an accountant, we had levels of different reviews. And it couldn't just be, hey, my CPA threw this together and sent it over. It had to actually be reviewed financial statements. So what commercial lending departments do is they're constantly checking that every company, commercial entity that they have a commercial loan with is meeting financial ratios that indicates that the strength of the company for them to continue servicing that loan. In other words, the bank is always preemptively, you might not sound like it or seem like it, but they're always preemptively looking at their loans on their books and ensuring that the financial ratios that are with audited statements or reviewed statements by according to generally accepted accounting principles, GAAP, they have the financial ratios to continue to meet their loans. And their lending documents state if they ever don't have the financial ratios, if they ever don't meet the requirements, then that loan can be called and the loan will be called. So commercial lending departments work with customers, clients, their commercial clients where they're writing these commercial loans, and they want to see a certain amount of capital in reserves, our liquid cash, we would call it. So I'm just going to move forward here to my next slide. This is a recent article. You can see this is September 8th of this year. This is Business Insider. And now we're again talking about liquidity. Liquidity in U.S. Treasury market represents the biggest systemic risk to stocks since 2007 housing bubble. This is Bank of America article from this month. So here's what's happening. The dollar is so strong, not because the dollar should be strong. The dollar right now, we've seen multiple phenomenons actually since the beginning of the year on the dollar, but the dollar right now is so strong because the dollar is required for collateral. In other words, there have to be reserves in cash of a certain amount in order to meet your financial ratio and your liquidity reserves. So you have a ton of commercial entities and personal entities that want to have a certain amount of cash on the balance sheet to meet those reserves. Cash is becoming an issue. I have said multiple times on the podcast, as we go through this situation, and you guys will start to see it very soon as we go through it, it's not going to be pretty. And for you guys that have been listening to the podcast that probably aren't in equities or in marginal equities or equities that you think you can hold for over 20 years, long-term equities, and hopefully you're out of bonds. We just had the Federal Reserve obviously do another 75 basis point hike. At least we avoided the 100 bips. We thought maybe 1 point was possible. I absolutely stated that it would be 75 basis points. But what I will say is that Powell again reiterated additional increases will be coming. They must do this. As I explained on a Fed podcast, probably 4 podcasts back, they don't have a choice. They have so inflated our money supply such a fast amount of time. It's an experiment that has never been done in the history of the world. And we just do not have that ability to absorb that much cash. And so we have massive inflation. Our true inflation number, if I haven't shared this with you, because, obviously I share a lot with my client base and I do a weekly update for just clients. And obviously I can give them a lot more information. But if we use the calculation that was used in the 1980s for inflation, we're at 17% inflation as we speak. So we really have double-digit inflation that's high. We have a liquidity problem because of the lending requirements now are looking for reserves. You must have collateral cash reserves, and cash is becoming a huge problem. So you've seen a lot of people that are having to do a lot of liquidation in order to get cash. And so cash is really an issue right now. And again, we knew going into 2022 at the end, Financial Times said this article, liquidity threat is huge because we just have so much commercial debt globally that it's instituting instability. It's institutionalized instability. A higher debt burden in the financial system has institutionalized instability. So this is what we're talking about. And then we come to this. So basically, this is an article from August. This has been even proceeding since then. This is the article I could find. There's no articles that have been necessarily disseminated from what happened last week, but we have seen literally the physical reserves of gold and silver. We have massive institutions pulling reserves, actually pulling reserves in silver and gold. So that is another indicator that the institutional money knows what's coming and is preparing for alternative hard assets. I've been submitting to you guys for a while that the Great Reset that moves us to central bank digital currencies across the world. That's what World Economic Forum and other non-government and organizations, NGOs like the World Economic Forum, there's lots of them, work with UN, work with WHO, work with all kinds of 3-letter acronym groups or 2-letter acronym groups to bring about this great reset. They want us to have a new currency. They want it to be a digital currency, and they want it to be, listen, I could do and I will do an entire podcast when the time is right about digital currency and everything that you can and cannot do with digital currency. But it is a huge problem. It's technocratic slavery. It is 100%. There's no more freedom without the autonomy of cash. There is no more freedom without autonomy. And when you're talking about finances, and so it'll start off harmless enough, but then they will start controlling, as they have done everywhere else and everything else they can control. So what I am submitting to you is what is actually coming, although they believe it's the Great Reset coming, and they're collapsing the system in order to bring about the Great Reset. And the system must collapse. The system will collapse. The system is irretrievably broken, and we are imminently facing a crash, a collapse, actually, globally, a global collapse of the global economy across multiple sectors, instigated by the instability of the over leveraged debt that we have, that we don't have the cash liquidity to even meet the financial ratios required to maintain that debt. So between the global liquidity crash, the retrieval of hard assets in vaults, the writing is clearly on the wall, and it's not a good story to tell. But I can't sit here and, it's awful because TV does this to you all the time. They want you to give the truth and the information, but then they want you to give the solution. And like, I remember once I was on TV and it took me like 15 minutes to just explain all the problems. And they came back and it was like a 20-minute segment. We had like 2 minutes left in the segment, and they asked me like for the solution in 2 minutes. I'm like, it just took me 15 minutes to explain the problem, and you want me to tell you the solution? This is TV, right? They want everything in a 30-second soundbite that can be run on the 5 o'clock news cycle or whatever. It's not going to happen. This is a globally created crisis over multiple decades of time, certainly since the 70s, since we went to off the gold standard completely in 71, we went to the petrodollar in 74, and we've had a long period, 50 years now, of low inflation and price stability with a global reserve currency. And we are at the end of that. It is over. And we are, depending on when this podcast goes out, but the Fed just basically moved this week for the 75 basis points. So we're in the week of September the 20th, 21st. This is where we are. And this is coming. And so I've been preparing you guys. I've been telling you to sell out of equities. I've been telling you to get out of your bonds because we know interest rates are going up even more and more and more. And most people have bond funds. They no longer have individual bonds. If you hold an individual bond to maturity, you'll realize it's discount or its interest rate or its rate of return. But if you sell it, you will lock in your losses all the time. So most people don't have long-term individual bonds or even shorter-term, medium-term individual bonds. They're buying ETF bond funds now, and bond funds absolutely will go down as they are fair market value priced according to current yield on a daily basis. So as the rates go up by the Fed, the old bonds with lower rates, they automatically go down and fair market value in order to make the interest rate go up to equal what is currently going on in the market. So I just wanted to tell you that institutional money is moving, and they are pulling. We had a ton of metals pulled from reserves last week. And the thing that I can say about that as a side note is you can see how much the metals are price manipulated right now. And that is because we didn't see if anything, we still had a gapping down of metals last week. So what we're seeing is just price manipulation. The central bankers of the world can't allow gold and silver to pop to the upside as the equities are gapping down, are coming down. And they're getting used to people are getting used to, okay, it's coming down. But we will have an actual event. We will have a one-day event. It will happen. You will see it. And so that is why we wanted you to be prepared with not being so exposed. Just generally, obviously, there's a lot of hedge techniques to get us over to the other side of this whole situation. But, we don't give out that advice publicly on the podcast. This is the one area that you really do need professional advice, and you should definitely seek it. But the other thing I wanted to point out, this is you can see a tweet by Genevieve who's a CFA, and her work is good. And I saw this. This was on September 14th, and she's asking who tipped off Wall Street to hedge last week. So this was her talking last week in the street about the prior week. And then she's talking about the amount of institutions that are buying record hedges. And these are records 3x that exceed 2008. So what we have Wall Street doing is saying, hey, something is coming, and we are preparing and we are hedging. And so Wall Street and the institutional money sees a much bigger correction than what we had with the Great Recession 2008, 2009. Now, the rest of the world calls our Great Recession the global financial crisis, the GFC, because it was that big and that impactful to the rest of the world. So basically, what we are seeing is the Fed not able to do anything but continue to pound the bond market, collapse institutions, through, that kind of paper across the world. They don't have a choice, because if they reverse course and they allow stimulus or easy monetary policy to come back into the mix, you will see a Venezuelan type reaction to our currency. It will become not worth less. And I don't want to say that it would ever be Venezuelan currency, but I do say that you would get this sense from everyone in the world that the United States is not serious about getting their monetary policy under control, and our money would seriously depreciate very quickly. On the other hand, if they do what they are doing, which is the course I told you 4 or 5 podcasts back, I said, I will tell you what the Fed will do. They will have no choice. And this is exactly what Powell's doing. On the other hand, he's being very, very, very hawkish. And he's letting the world know we care about the strength of the dollar. And he's going to keep raising, even though that will just decimate bond and equity markets. It is, for now, temporarily keeping the dollar strong. That is the one snap. The snap of the dollar will be the domino where the collapse will then come. And that is the snap that we are waiting on, that we expect. Any event, by the way, it doesn't have to be an economic event. Any event could trigger this. There's about 1,000 events that I know that are literally floating in the atmosphere that could be pulled down at any one time. Military events, this Russian escalation verbiage-wise, obviously very concerning. Lots of things going on with China. Those are the military kind of events. Obviously, Iran, Turkey, Israel, those are all of the Middle East is always an issue. We're on top. Those are all military things that could cause any escalation, could cause easily an immediate reaction. But beyond the military, any economic data, we wait with bated breath when the Fed, is going to announce a new interest rate hike. We wait with bated breath to get the minutes to see if they're dovish or hawkish. You got to stop yourself and ask yourself, what kind of situation have we gotten ourselves into globally when the market can literally, and this has happened so often in the last 28 months, I can't even tell you, where the Fed comes out and makes a statement, or even just a Fed president from one of the Fed branches makes a statement, and the market literally swings from green to red or red to green. And we have a whipsaw day where we completely end up a different way than from when we started, just because of the notes and comments from the Fed. This tells you how much of our markets rely on central bank policy, which should be obvious to you at that point that we need to divorce central bank policy from our markets. Our markets have enjoyed, let's be honest, our markets have enjoyed easy money, easy credit, credit requirements since 2008. We've had we've had basically a 0 to 25 basis point Fed funds rate. We've had extremely low cost of capital for corporations. We've had super low mortgage rates and car loans for individuals. We've had everything so cheap, and we've had such low inflation for such a long period of time. If you think about it, really, I'd say 13, almost 14 years, from 2008 fast forward to 2022. That's a 14-year period. We definitely have inflation this year, last year. So we've got 12 and a half years of low inflation, and coronavirus just pushed us over the edge. But I want to be clear, MMT doesn't work even if it's a slow death. Coronavirus put the fiat system over the edge, and it's on the verge and it will collapse. That is a foregone conclusion. That will happen. I would bet every last penny and all my kids on it. It is going to happen. Mark my words. However, it would have happened eventually, even in the absence of coronavirus. It would have just been more of a slow, painful death. This is going to be a very fast death, and it's going to make America have to figure out what we're going to do as an alternative. The alternative, of course, as I've been telling you, is not the central bank great reset that everybody says is coming, which is going to come, just not the way they expect. What I see is a multi-polarity world where Russia, China, the BRICS nations really pull around probably half the country, half the world, half the globe, or more. Saudi Arabia is a really key player here, but they will have a new reserve, and their new reserve will be based on hard assets, gold, silver, and rare earth minerals. And therefore, we will be forced in the West, we will be forced, including Europe, to go back to a hard asset-backed currency system. Again, it will happen. It is happening. It is coming. It is coming as we speak. So I will do my best to come on here every week, especially as things really start to heat up now, and give you guys as much as information as I can publicly. There's definitely things that I say to my client base that I don't share publicly, and I don't use this podcast to get business, to generate business. We have enough avenues through which we generate business, but I do care about you guys. I do care about America. I care about American citizens. I love this country. I became an attorney because I love the Constitution, and I love finance because I'm a mathematical nerd. Like, I am such a math nerd. Like the math, games and the math conferences that people go to. I was, I'm a nerd. I can't tell you anything else. So I was the weird nerd cheerleader. That was my life. That is my life. Still cheerleader, just for a different team. So right now, I'm cheering for America. I'm saying a prayer for America. We are going to go through some difficult times here, guys. Go out and think of, if you live in Florida, we prepare for hurricanes here. Prepare for a really, really bad hurricane that's going to last 6 weeks to 12 weeks. You definitely need some liquid cash at home. What I mean is physical cash at home. Don't think I've got cash in the bank. I've got my debit card, my check card, everything will be fine. You guys, capital controls are already happening. I've already had multiple people report across the country that they're trying to call up and get $50,000 out of their bank. Their bank's telling them, no, we can't do that. And we need an appointment. It's going to be X amount of time. Another person telling me they tried to get over $5,000. This is less than 10,000, over 5,000. They were told they needed an appointment. There's a lot of people that are making wire transfers out of banks, out of cash, and into metals. And a lot of these banks are pushing back on these wires going out. The capital controls, I can feel them coming already. What a capital control is it's like they want to keep the cash in the bank. It's called a bail-in. So instead of being so easily to send out your money wherever you want, whenever you want it, they're going to start asking you questions. I've sent multiple wires myself. I think I mentioned this to you guys on the podcast before. I've already seen it on even just my own personal banking, and I have to call somebody and say, hey, it's me. I know what I'm doing. I don't need to get 500 questions every time I send a wire. But it's coming, you guys. So take this opportunity that you've been given. You've either been forwarded this podcast from somebody that loves you, a friend, or you just stumbled across it somehow. Take this opportunity to avail yourself of the time that is left before we see the craziness start to come. There will be a lot of Americans that will unfortunately be seriously caught off guard by this. They've called their standard Wall Street advisor. I was going to say my name. They've called their standard Wall Street advisor, and the advisors told them, oh, stay the course. If you get out now, you can't time the market. If you get out, you'll miss the recovery. You should stay in. It's a long game. This will be fine. And those people are going to listen to that advice, and they're going to stay in. And it's going to be devastating for a lot of people. And they're also not going to know any idea that any of this is coming. I think the mainstream media is doing a tremendously good job of literally keeping what's really going on in the world outside of America. I've never seen any kind of situation like this. To be honest, I'm in the media on a national basis, on a weekly basis, and I have just never seen so much information that's not being disseminated, that is being disseminated outside of the US. And it's really sad. And it hurts me for our country, because we as Americans, we always believed in free flow of information and to hold our government accountable because of that free flow of information. And, it'll come out very soon here, what's changed with the media since 2014. And we can go into that at another time. But they do have some ability now that they didn't used to have. And that's probably contributes a lot to what they're not covering and what they're not doing. So we will get through all these things. I definitely will continue to do the podcast. And as I can tell more information of what's happening and why it's happening and how it's happening, I will give you guys as much information as I can. But for now, you're already well far ahead of the game. Most Americans have no idea what time frame we're in and what is coming. And so you guys do. And that's really great. But institutional money, if you follow the ultra wealthy and you follow the institutional money, which is the people that supposedly know what's really going on, they are doing exactly what I've been telling my group. So it was interesting because I had the town hall on the 13th, and that tweet from Genevieve came out on the 14th. And basically my town hall to my clients going through data was, hey, this stuff is coming in earnest now. And now it's the time to really make decisions. If we haven't already done certain things, we're running out of time now. And it's just interesting that I just wanted to share with you guys that, we are seeing the right picture, the broad picture, and we are bringing that to you guys on this podcast. And we will continue to do that. So we wish you all the best this week, you guys. Don't freak out. Don't panic. If you ever have questions, you can always call our office and set up an intake meeting to become a client. This is obviously just a free podcast to get you guys information publicly, but that's serious stuff now. And I don't use the podcast to generate business, but if you ever do need help and you've been listening for a while and you think about, hey, maybe I should be with a firm, I think it's going to be a tricky navigation road to hoe here. And I can't see doing it without some kind of professional advice and management. And, we'll see what goes and we'll see what happens. So hope you guys are having a great week. We are going through this process and we will be back with you next week. Take care, everybody. Bye-bye.